Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the S&P 500 via our proxy, the SPY, and we're going to be doing some Elliott wave count first and then some basic technical analysis. But before we begin and dig into the more recent price data, I just want to come back to a naked chart of the S&P 500 and I want to get the whole bull market in perspective for a little while, because we've seen some markets, China lately and Hong Kong, we've seen some serious sell-offs going on in certain indices around the world. Could be a sign of things to come, of other indices rolling over, but I just want to get a recap on the overall picture since 2019 and this very long and drawn out bull market we've been in. So the first thing we need to do is frame the market and get some geometry sorted out here. So we're just going to switch into log scale, get a better feel for this whole move up from 2019. And I've got a couple of tools here I want to throw up. So the first one I want to throw up here is a pitchfork. So let's get some basic numbering up here. We're saying this was a 1 into a 2, this is a zigzag. Then we went into either a 3, ABC expanding flat into a 4, now we're looking for a 5. Now the 3 could have been an expanding triangle, A, B, C, D, E here, or it could be a flat here. Let's just leave it in the flat position for a moment. We're going to shift this into cycle wave degree. Now everyone knows, who's been following the channel, that I've recently been suggesting that we're approaching the top of a primary 3, then we'll come into a 4, and then we'll go into a primary 5. Now, we are right at the edge of the pitchfork. So there is an argument to suggest that the top is imminent and we are approaching the extreme bounds of this market. And it's taken a long time to get here, but we are approaching it. Now, as you can see, however, I would argue that certain levels that get tested in market geometry, in the pitchfork over a long period of time, often get retested later. This is just very, very normal. So if we just zoom in, for a minute, I can show you what I mean. Let's just get our brush tool so we can. So let's take from our wave 1, wave 2 swing here. We can see that we got a test on the golden ratio here from a median line. Then we came up and tested it again before falling away back to the median line each time. We then finally tested it again and broke it, then tested the outer bound, came back to the 61, came back to the outer bound, came back to the 61, came back to the outer bound, came back to the 61, finally broke through the outer bound, came back again, and then started to push higher. Worked the way back to the median line for a perfect retest here, fell through it here, came back up to the 61 again. You know, and you can see what I'm saying here. It's like we do not just go touch done. We tend to keep pushing. And pushing and pushing and trying to find these levels again. Here's another test, here's another, here's another, here's another. Finally break out here, come back and test the 61, come back and test the 61, come back and test the 61 again, come back to the outer bound, test the 61, fall through it, test it on the rebound, fall through it to this 61.8. As you can see, the golden ratio is just a constantly in play over this whole time period. Come back to the 61, join this area here. Then we come back to the top of the outer bound, all the way to the extreme outer bound during the COVID crash, and then up to the 61 to test it here, up to test it here, back to test it here, back to test it here, testing the tops in between before finally making a rush on the outer bound. So it's perfectly believable, I think, then rather than to just say, oh, we tested it, that's it, we're done, and now we crash, and that's the end. It's perfectly likely to come down, test it, come down, test it, and to keep crawling higher, doing something like this as we just keep testing the extreme of the price range here before finally giving it up. So as you can see, I mean, this has been a very consistent pitchfork in terms of predicting where price is bouncing from the important levels that it's testing as we go. So if you think about where we currently are, let's just pop up another temporary Elliott wave count. Here's my 1, here's my 2, right? I'm looking for something of general parity, something which looks like it belongs to the same wave degree, and there doesn't seem to be anything here yet. So I'm thinking 3, 4, then 5, right? That's what I've been suggesting. Now, I could be wrong and the top could be imminent, okay, but I just feel like we need something of similar size to this move here that looks like it belongs before we finally come up and finish. Okay, but a top of some sort appears to be absolutely imminent. Now, if I just take the pitchfork off for a moment and show you something else. Let's look at some fib levels here. So we're just going to come off of log for a moment, or to the chart. So the first thing we're looking for is our wave 3. So let's get our fib extension tool here. Let's go to the bottom of our wave 1, the start of our wave 1, up to the top of our wave 1, down to our wave 2. We find the 3 at exactly 2618, which is a perfect wave 3 extension. Okay, 1618, 2618, 3618. These are where we expect to find the wave 3. Brilliant. The wave 4 actually comes back to the 1618 and we create this big B wave swing, external correction, another external swing to external swing outside of this low and this high. So a huge external correction which resulted in this COVID crash here. So that's our target for our 2618. Now, if we take, knowing we've got an extension in the 3, our typical measurements of a 1-to-1 ratio of wave 1 to 5 in linear, we can see it's completely meaningless. The 3 doesn't even get the 1, 100% extension of 1 doesn't even get us back to the top of the 3, let alone where we are now. So no relationship in linear measurement at all. So let's come back and let's take a length of our 3 and project it from our 4 to find our 61 ratio. Here's our 61. Yes, it was a perfect top, right? Which was the September last year, you see? This is where we hit resistance. So this looked like the likely top at the time. 61% of wave 1 and 3 from 4. But we came through it, we came back, and then we just ignored it and carried on higher. So this is not of any relation either. So let's come into log for a minute and let me show you something very interesting. Let's take the length of our 1, which is what we'd expect to see for our wave 5 from 4, given the extension in the 3. And now let's project it from the 4. Look at what we get for our 100%. 447 is right above our heads. Right here. This is a 1-to-1 ratio. Okay, so let's just mark that on this naked chart. We can always come back and move stuff around later or save it. And let's just lock that in place and pop a price target up here. So I can understand, given the recent price action in China, Hong Kong, some other markets are getting shaken as well. I can understand people saying US is imminently next, the top is coming, and we're about to crash. It's possible. It's right above our heads. Now, if we put the pitchfork back on, here's the outer bound. Here's the white line at 447. Okay, so you've got some people out there who are like, we're about to top imminently, Tom. You're wrong. We're not going to go on any longer. Look, guys, you might be right. Maybe. The issue I have is the current count doesn't support this idea in the shorter term. Let me just show you why I think the 3 is about to come in rather than the 5. Here's a 1, here's a 2. We're looking for something of similar parity like I mentioned, and there's nothing here. So if this is the 3, this could be the 4, back test the pitchfork, not break the 1, then we come back to the white line and the top of the pitchfork. We're higher and we complete. If we come down in a hurry but don't go as deep, then maybe we can get pitchfork and the white line to touch exactly the right place, and we go 3, 4, 5, takes us out to the end of the year, could take us further along this pitchfork, could even break this 1-to-1 relationship. Okay, all of those things are possible. I'm just saying that for the meantime, it does not look like we've had a similar wave degree correction to this here. That's all I'm saying, and I'd expect to see that before we finally put in the top. So although people are like, oh Tom, you changed your mind and now you don't think the top's in, look, it's a 12-year long bull market, guys, and the top is imminent. It's just imminent doesn't mean today, it doesn't mean hourly or daily. Imminent after 12 years of moving up in the market can mean months, but it's still imminent. So for the crowd who got in after the COVID crash, the noobs who are into the market now, who are under the impression that stonks only go up, they're going to get a very rude awakening in the next few months. They're going to suddenly get slapped back down to reality with the rest of us who've lived through previous market corrections and understand that nothing goes up forever. So if this is a completion of another cycle degree or super cycle degree, which is what I've got it as, then anything between a 50 and 80% sell-off in the market is perfectly acceptable and highly likely to occur. I know obviously if you're new to the market you're simply not going to believe that's possible, but I don't give a fuck whether you believe it's possible or not. It is, and has happened before and will happen again. So if you're uber bear and you're already short and you're disappointed by me saying this, I'm sorry. I get your frustration, I feel it, I understand. I've been there myself in previous circumstances. but it just doesn't look quite complete yet. One more push down, one more test. So on that note, let's save this chart here now that we've got some very strong evidence for the completion of this bull market being on the horizon. And let's come over and have a look at the more recent count. So, bringing us up to date from March 2020 low, we have our primary wave degree looking something a little bit like TradingView moving my stuff around again. So we got something like this: 1, 2, 3, 4 to come. Primary wave 4 invalidation here at 359.33. 4 does not have to be this deep. With how extremely bullish this move up since the March low of 2020 has been, it wouldn't surprise me if it wasn't anywhere near that deep, because the buy the dippers are just programmed to throw all of their money in until the very end. It's just what it's all we've seen. You know, for the last 18 months, actually longer than that now. It's just the attitude, and once everyone's in and every last dollar that's going to be committed has been committed, that will be the top, and that will be when people like me and other people who are prepared and understand this is coming will be fine, and this is when the stonks only go up crowd will get murdered. But that's fine, I'll happily take their money off of them. Now in the meantime, how much higher have we got to go? Well, I believe that we're now in the minor wave 5 of intermediate 5 of primary 3. We're going to come down into that 4, and then we're finally going to come down into that 5 out into the end of the year, perhaps into next year. So let's just turn that wave degree off. Now, the recent price action is confusing because we've had another overlap after. Now, we haven't got this problem in the Nasdaq, which we will come and have a look at maybe next week. But quick heads up about that, it's now the summer holidays and I'm back to being a full-time parent again, so my time is limited and I'm doing the best I can. I'm also going on holiday in a week's time, so next week is the last week where I'm really going to be able to smash stuff out. So I'm going to try and get as much done as possible. Now getting back to the point here, so nothing changes regarding the previous count I had for this, so let's just bring up the pitchfork. Bear with me a moment, I'm trying to remember which one it is. Trying to get this primary 3-4 pitchfork. Come off the log. There it is. So take off of this wave 1, wave 2 swing here. We can see how once again traded around the median line. All of this was around the median line. We haven't really come up to the outer edge of the pitchfork yet. We just keep using the median line as support or swinging around it. So I think a wave 4 internal correction or correction within the usual bound of the pitchfork would be perfectly acceptable. Okay, now we had a zigzag in the 2 here, so we can expect some kind of flat pattern to occur here in the 4, which we haven't seen yet, but we're expecting it soon. So let's just hide this again. So coming back to the recent count, the issue I've got here is this overlap. 4 overlapping the wave 1 here. Now this doesn't really bother us because we had the wave 1 in the same position. When we last look at the SPY, we just weren't expecting this overlap. So what I've done is I've just joined the wave 1 and the wave 3. If we come back here, we can do it here. Sorry, I should be joining the 1 and the 3, not the start of the move. And the 2 and the 4, and we end up with this expanding pattern, you know, an expanding diagonal. So the 3 is longer than the 1, more than 100%, and the 2, the 4 I should say, sorry, is deeper than the 2. So far we're on course for an ending diagonal in a 5th wave. So should be a series of 3 wave structures. If I put on a group of counts I've got here, we can see an ABC swing into a 1. This is a zigzag into a 2. I haven't labelled it. This is an ABC into a 3. This is an ABC into a 4. Zigzag and zigzag. Zigzag, zigzag. This is what we should expect in an ending diagonal. So no flats, unless they're in corrections within B waves, in which case they can be flats, triangles, whatever. But the overall impulsive and corrective moves have to be zigzags. So if we come down to the 2 hour, you've got 3 wave swing here with 1, 2, 3, 4, 5 waves in the C, and 1, 2, 3, 4, 5 waves in an A, 3 waves in a B. You've got another 3 wave move here in a 2. You've got 5 waves up into an A here, flat in a B, 1, 2, 3, 4, 5 waves into a C to make a greater zigzag of a 3, and then you've had a diagonal into an A, 5 wave structure, A, B, C, zigzag into a 4, and now I think we're looking for something like this. A, B, 1, 2, 3, 4, 5 waves up into a C, and this would complete a series of zigzags again, like this. And that would bring us up to the top bound of this expanding pattern. Now we'd expect to find the 5 to be longer than the 3, but traditionally, it's not always the case, but it's quite common. The wave 5 fails to make the trend line in an expanding diagonal. It tends to throw over in a contracting diagonal, but it tends to fail in a expanding diagonal, but it should still be longer than the 3. So if we set a target here and we take the length of the 3 and we project it from the 4 to find the 5, here's the 100%. So as you can see, a move just beyond the length of the 3 would be all we need, and it could still fall short of the trend line. It could go A, B, come through, fall short of the trend line, and then we start our wave 4 correction. So that's what I think's going on currently. It's been a bitch. I'm going to hold my hands up and just be honest. It's been an absolute bitch. Price action has been like cancer lately. It's just deeply unpleasant. And but it is what it is. Like I said, the Nasdaq counts more cleanly. These kind of patterns, as the market lumbers and forces itself higher against all odds, you tend to end up with shit like this, because it just won't give up. It just won't die. So it just keeps crawling higher, and you get these weird expanding patterns, contracting patterns, diagonal patterns, because the market can't impulse cleanly, and it keeps trying to correct. So you end up with a correction, correction, correction. Nothing's enough to kill it, but it just keeps pushing higher. So up here, we would find, I think, the edge of that long-term pitchfork. Again, if I can just bring it up, I think we've... Why has it gone? Okay, it's not that one. It doesn't matter. We know it's up here. It's right where we are. So somewhere right above our heads. I don't think I put it. I think I deleted it off this chart rather stupidly. But either way, that's what I think is happening now. We're dealing with some kind of ending diagonal pattern. We've got one more 3-wave swing higher. We've got to get across this line really to make it a legitimate ending diagonal. If it fails before then, something else has happened, and I don't know what it is, but something else has happened. Does seem to be an expanding pattern though. So anyway, let's leave our Elliott wave analysis there. I've been waffling plenty. Now let's do some basic technical analysis in the meantime. So let's just hide our count, come out to the weekly for a moment. We're going to bring up our exponential moving averages of 10 in blue, yellow, 20 in blue, 60 in orange, 250 in green. Alter the chart. And then we're going to bring up our momentum indicators here, see what we can see. Alright, so let's come all the way out. Since we were looking back from 2009, let's see anything we can see from 2009. So we got overbought to oversold here. Now this is where we have our wave 1, 2, right? Overbought, oversold. You know we like to look at what I call a round trip to get a significant cycle degree or primary degree on. We got oversold to overbought here, and we got overbought to oversold here. So 1, 2, 3, 4, breaking through the 250, breaking through the 250. That's just really typical. If you're one of our Patreon members, you know that when I do our deep dive videos that you guys vote for, when I'm first setting up market geometry for the long-term cycle or primary degree count, I often look for the 250 to be broken. I look for these overbought and oversold conditions, and I look for market geometry to break as well in the short term to confirm these corrections, and that's what we're looking at. So when we come back into the shorter time frame here, we're going to do something similar when the top finally comes. Okay, we're going to come all the way back through this 250, and I think honestly we have to come out to the monthly time frame because we're at super cycle degree, so we'll be looking for a much deeper correction than the March low of 2020. Could still be a few months off, like I said. In the meantime, we're above the 10, above the 20, above the 60, above the 250, still looking super strong, super bullish, have been the whole time. We've got some bearish divergence building up on the shorter time frame here. So from the high of the 3rd of May down to the recent high, we have a series of lower highs, okay, but it's nothing to write home about until it breaks. We can't call it a divergence until we know it's a top. We see the same here on the MACD, a high and a lower high, but this could disappear with another push higher, or it could signal a top. We've had a crossover of the moving average, the short term over the long term, the signal over the average, and a sustained movement below it, but no significant bearish breakdown yet. Okay, so let's come to the daily time frame and see what we can see. Bouncing off the 10 daily exponential moving average, tested it twice. Nice bullish candle here with a nice long tail bullish hammer. So this looks like we've come up in a 1-2, or we're doing that zigzag, sorry, so we've done that, dun, dun, and then we're looking for another push higher. Okay, out of our series of zigzags. Above the 20, above the 60, bearish divergence building up again on the daily time frame. We have a high back here on the 2nd of July. We have a high, higher high, higher high, whereas we have a high, lower high, lower high. So it does support the idea that we're approaching a top. Okay, top of a 3, I think, could be a top of a top. You know, after such a long time, it's just no one's gonna call it to the day. It's just a thing, isn't it? If you do, it's luck. Short-term moving average signal has crossed over the average to the upside. Some green bars here in the histogram, but once again, high, lower high. More significant here in the long-term divergence in the MACD. It is present here in the RSI from April through to present day. We've had a high and a lower high on the daily time frame, and we've had a high and a lower high on the MACD, but a more significant divergence in the MACD, I'd argue, than in the RSI. However, it is still there. High, lower high, lower high. So yeah, this big divergence is building up again. It is going to break down. It is going to break down imminently, but imminently could mean another 100 points before we going up before we finally give up and do something significant. Something significant. Okay, and what do I mean by that? Well, the last significant we moved down we had was at primary degree 1 here. As you can see, during the smaller wave degrees, your intermediate and your minors here, we stay above the 60. In the smaller time frame minute and minuet, we stay above the 20 and above the 10 in the minuet, and we just tend to follow this kind of pattern. When we have a more significant break, we come down through the 60. So that's at least what I'd expect to see in a 4. Come down through the 60 and then make that final move up into a 5. Okay guys, I'm going to leave it there. I've gone on long enough. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, leave us a comment in the comment section below if you want to. Hit the little bell notification icon to remain informed of future video releases. And as always, thank you very much to my Patreon subscribers. Your support is greatly appreciated. If you're interested in becoming a patron, there's some really great benefits you get. You'll get deep dive videos each month. You'll get regular weekly updates, Patreon exclusives which you won't get on YouTube. You'll get access to the public Discord where you can talk to me and other members. You'll get access to my weekly chart updates. And if you go for the higher tier, you'll get access to my stock rating system and dividend calendar as well. So there's a whole bunch of benefits. Now, if you are interested and you want to sign up, I will say please leave it to the 1st of August. You do not want to sign up now, get charged today, and then charged again at the 1st of the month. Okay, so for your own benefit, just leave it a few days. But lots of benefits to look at, so if you're interested, please go over and have a look. Alright then guys, take care. Oh yes, one more thing, sorry. If you're not following me on Twitter yet, there's a link in the description box below with the Patreon link as well. Go over and follow me. Alright guys, take care. I'll be back with you soon. Bye bye.